So on Wednesday, we had a Fed meeting, right? We had the Fed decided to keep the rates unchanged, and they said everything they're going to do going forward is data dependent, which President Trump does not like. President Trump wants interest rates ASAP, low interest rates. There is a reason for that. We have $9 trillion in bonds maturing, trillion with a T, in the next quarter. Well, those need to get replaced. Well, the coupon, when those bonds were issued, we were in a zero interest rate policy period. So the rates on those bonds, that on those IOUs, the new IOUs that we're going to issue, is going to go up tremendously. We're already paying $1.2 trillion a year so far on interest alone on our $37 trillion in debt. Do you guys see what's happening here? Okay. So who wants interest rates the most? Yeah, the consumer does, right? If you're carrying balances, if you're going to buy a new car, and mortgages are going to go down, all that good stuff. Well, it's not happening because interest rates are very, very sticky. They're not going down. Fed cut the interest rates 100 basis points. The market raised the interest rates by 100 basis points. So that doesn't happen that often. So the market's not listening to the Fed. President Trump wants lower interest rates. Well, President Trump is not going to get it because as of Wednesday, Mr. Powell, the chairman of the Federal Reserve, said, we don't see any reason to cut rates here. And so this is their new forecast. The Fed makes multiple revisions to their 2025 economic data projections. One, cuts 2025 GDP growth projection from 2.1% to 1.7%. Our GDP, by the way, is about $29 trillion, and we have $37 trillion in debt. So we're running about 130% of GDP. But let's see what Doge is going to do about that. So that's the negative cut, right? Cut the GDP expectation 2.1 to 1.7. Okay. Raises unemployment forecast to 4.3 from 4.3 to 4.4. That's a negative change as well, right? Raises the PCE inflation forecast, which is what the manufacturers pay, inflation forecast from 2.5 to 2.7. Okay, by the way, so here's the mandate of the Fed. 2% inflation with full employment. And full employment they consider at 4%. So now they're going away from their 2% inflation target. They're kicking the can down the road. They know inflation is sticky. They know tariffs are going to increase inflation. And they go like, we don't need to cut rates because if we cut rates now, all these numbers are going to get worse, right? PCE is going to be, instead of 2.5, it's going to be 3. Well, we don't want that. Our target is 2%. Well, now they're changing the target. They're moving the goalpost to 2.7. Raise core PCE inflation forecast from 2.5 to 2.8. So now they're giving up. It looks like they're giving up on their 2% inflation target. All of these numbers are contrary to a booming economy. If GDP is going to be lower, unemployment is going to be higher, CPI and PPI is going to be higher, what are we looking for? Again, you guys are going to say, oh, nothing about bad news. I'm like, no, but this is all affecting you people. I mean, this is reality. You need to understand these to just make changes in your life so you don't go order tacos on Klarna. I mean, what else am I supposed to say? So Fed is moving the goalpost, and the goalpost is higher inflation, lower economic growth, higher unemployment. I talked about this again 4 months ago. First one. I don't think anybody has done it yet, but I'm pretty sure the word's going to come around. When you guys hear it on CNBC, think of me. Oh, Serge said that like 4 months ago. Okay, what was that word? Stagflation. What does stagflation stand for? Stagnant economy with higher inflation. Well, look at the targets. 2.1 to 1.7, 2.5 to 2.8. So inflation is sticky. And Fed goes, we're not going to cut rates. When the inflation, we're changing our targets. Actually, I think this was pretty hawkish, but the market reaction was quite the ridiculousness, but it is what it is. So if Fed is not going to cut rates, Trump wants lower rates. They're not listening to each other. Fed is, I think, doing the right thing by not cutting rates, because if they do cut rates now, more, it's going to add fuel to the inflation that exists. And now we're totally going to be in a mess, right? I think Fed is doing the right thing by keeping the interest rates unchanged, and the targets for 2025 about 2-3 months ago was 4 more cuts. Well, now we're down to 1, maybe at best 2 cuts this year, because Fed is seeing the trouble ahead. But now Fed is also caught in a box. Slowing economy requires lower interest rates. Higher inflation requires higher interest rates. Right? See, this is what they do. This is behind the curve. They let the genie get out of the box, the inflation genie get out of the box, and they can just put it back in now. Well, it's difficult to put it in, because if you raise rates, which they did, look what happened to the economy, to the markets. Tank in 2021, 2022. Well, now they're cutting rates. Bond market is not listening. Trump hates it. He wants lower rates. Consumer is stretched. And market seeing trouble ahead, and that's why it sold off 10 points, 10% on S&P and 14% on Nasdaq. And I think it's just the first legs.